Hello, everyone, and welcome to the Buck Stops here. I'm Catherine Murray. We are rounding out 2022, and one of the best performing sectors and stocks, of course, has been the energy sector. So I wanted to provide perspective in terms of where we go from here into 2023. Who better than to give us insight other than Eric Nutall? He is a partner and senior portfolio manager at Ninepoint Partners. Erica, great to be with you, and thanks so much for your time today. I know it's busy rounding out and wrapping up 2022, so thank you very
You bet.
much.
Always happy to be with you.
Thank you. Eric, this has been one of the best performing sectors and stocks. I think it surprised so many people. So many people have not been invested in energy for years. You have. I actually have as well since 2018. I think the question is, though, does it continue into 2023? What's your big picture perspective here?
Yeah, it's a fair question. It's the same question I got asked this time last year after a very, very strong year. We think we're in a multi-year bull market for oil. We've revisited the reasons for that. We just think there's a structural imbalance between supply growth and demand growth going forward. What was, we were up about 45, 46% this year. But I feel disappointed in that. And I honestly thought it'd be even better than that when we look at valuations, when we look at the macro backdrop. We've had headwinds this year to battle. If anything, I underestimated how effective the U.S. administration would be at attacking the oil price, i.e., the gasoline price, heading into the midterm election with the biggest release from its strategic political reserves or petroleum reserves in history. 180 million barrels supposedly to counteract the impact of what was happening in Russia and Russian losses, which we never saw. So we had these massive headwinds this year, many of which we can talk about today, that are all ending. We've got China opening up. It's going to be a gradual, very bumpy process probably, but we're talking 1.5 million barrels per day of demand normalization. We've got the SPR release ending in a week's time. We've got now the impact on Russian production. Finally, we're seeing their exports fall by about 500,000 barrels per day, month over month. So many of those headwinds that we battled this year are ending. And so, yeah, we're up, 46%. We look at to 2023. We still believe in $100 oil. We think the macro backdrop remains very, very favorable. But even if you believe in where oil trades today, we see very meaningful upside in stocks where they're trading at about 19, 20% free cash flow yields. This year was all about deleveraging. So next year, more meaningful dividends, more meaningful buybacks, i.e. driving that re-rating. So yeah, I'm very, very bullish about not just next year, but the next several years. It's going to be a gradual process of these stocks being re-rated and trading closer to where we see more proper and fair valuation.
And a lot to pick up on there, including the re-rating of the stocks, because I think that investors are still not quite into the energy trade, and you can see that as it relates to the percentage that energy as a sector represents on the S&P 500, correct?
Yeah, absolutely. We're about 5% right now of the S&P 500, so that's down versus 10. Even TSX weighting is about half of where it was versus prior highs. And so when you think about, okay, well, what should an investor want? An investor should want to get paid, and they get paid through excess free cash flow, and through buybacks and dividends. There's no other sector that is generating the amount of free cash flow than the energy sector today. There's no other sector that has paid down debt and delevered so quickly to put them in the position to reward shareholders. And so when we look at both the micro and the macro, so the macro for oil very positive despite a likely recession in certain geographies next year. So the macro remains favorable. And from the micro, meaning the position that these companies are in from a deleveraging perspective now and able to not grow, not have to pay down debt, but instead have this wall of free cash flow. And the only proper usage for that is to give back to their shareholders and reward them for what's been a tough go for the past 10 years. We've had a couple of good years,
Yeah.
but it's been a tough place to be. So now it's our time to get paid.
It's been a tough 10 years. There's no doubt about it. And I'm really curious, Eric, because of that fact, there's a lot of people, portfolio managers said, I'm not going to cover energy anymore, or hedge funds or what have you, saying we don't really need an energy PM anymore, to the point where there aren't that many energy PMs out there, portfolio managers such as yourself. Are you getting more calls from institutions saying, hey, I got to at least have some exposure here? Are you getting calls from the States? Are you getting more inflows? I know from a retail perspective, you probably do, but what about some of the big players saying, I got to get into this trade, this investment?
Yeah, we're now the third largest energy fund in the world, and we see, generally speaking, inflows, institutional interest. We signed our first institutional client this year, so all the signs I've wanted to see are there for an inflection in the interest in the sector.
Okay, we'll take a quick break. We'll be right back.